Hello guys, how have you been all? So I'm back again after a long break, I'll say. But yeah, I'm back for you guys because I took a little long break. But yeah, I was doing things which I really want to do, and so that I can get more content for you guys. I've been working on that as well. I have a full time job, I'm an NIT and IIM graduate, pass out, and I have a full time job in project management. So, but still, I want to talk to you guys. I want to reach out to you guys and help in any possible way so that uh, I want to reach out and help the society and my viewers as well. So, I've been reading a lot lately about spirituality as well. I was busy in that. I went for a Goa trip for around 7 8 days, and yeah, I'm back again today with my new video. So let's start for our today's session. So today I'll be talking about more on personal finance because this is February going on, and we have to submit our investment declaration as well for uh, tax deduction and all. So I thought, why not reach out to people? Why not reach out to my viewers so that so that I can help them, and so that I can at least share some inputs or knowledge whichever I have or whichever experience I have. Like, it's a good time before the financial year ends in March, so you guys can actually work for uh, investing in good mutual funds which are tax saving mutual funds, and not only tax saving, general, as a investment device, or as a investment instrument, you can say. We can talk about different in mutual funds in today session, and for any further queries, for any further discussion or details, or please comment in the comment section, and I will reach out to every one of you to discuss those queries or any discussions. So let's start. So first of all, mutual fund. I'll tell you guys. You all know, and there's a lot of buzz around mutual fund, and there's a lot of ads also playing around mutual fund, like mutual fund sahi hai, and mutual fund karo, and jo bhi hai. You guys know. Mutual fund is nothing but it's a sum of pool of money, and which is managed by a mutual fund manager and their teams. So it's like asset management, and various people come together, and they decide, and a particular strategy of money of mutual fund is there. Like, what is their long term goal, what is their medium term goal, and you have to align yourself. You have to align your profile, you have to align your financial goals according to that, and you have to select a suitable mutual fund to invest in that. So that is the first thing. And yeah, there are n number of types of mutual fund, n number of companies who are providing mutual funds. So you have to first set yourself a goal, like how, what is your time horizon for investment, like whether you want to invest for 1 year, 3 year, 5 year, 10 year, or 20 years. So whatever be the timeline, what are your goals? Like, you are saving, you want to go for a trip, my one personal favorite. You want to get a car, you want to go for a children's education, you want to go for a marriage. So it depends on your goals, basically the time horizon, the financial goal, and the corpus amount which you want. So it's a very basic thing which I'm discussing. So you can just if you know all this, you can just skip all this, or maybe play on high speed for this, play on 1.5 speed. So yeah, so this is mutual fund. This is just the basic about the mutual fund, which which I suppose you guys must be knowing. So like, now we talk about types of mutual fund. There are lots of types of mutual fund available which you can see, and there are not only mutual funds, there are funds of funds as well. There is a fund which invest in all certain other mutual funds as well. So there are also funds of funds. So like if you don't want to invest in just single mutual fund, there are fund of fund as well, where your money will be invested in certain percentages in different mutual funds like HDFC. Nasdaq is like one is going into equity, one is going into debt mutual fund, one is going to into hybrid, one is going for India opportunity consumption, and like it can be fund of funds as well. So yeah, those are details which we can visit later. Now first of all, very basic mutual fund is an index fund, and I will say it's a very good fund for any beginner who want to just play along with the market and want to stay in line with the market, and does not have time or energy to revisit and rebalance his portfolio, keep on checking the stocks and all. So this is the very basic kind of mutual fund. It is index fund. So index fund is a mutual fund, and it gives a standard return which is linked to the market. You can choose between any of two Indian indexes which are there, Nifty or Sensex. So Nifty or Sensex mutual fund is there. You can go ahead and choose from any of the mutual fund providers like HDFC, ICICI, Canada. But just mind it, there's a catch over here. Like, you can see like what is the exit load, like whenever you want to exit the mutual fund, how much percentage of that amount of the invest you have invested are they going to charge the fees. So you can see like if there is not there will not be a, first of all, there will not be a very much difference in the returns because they are directly linked to the market. Two things you need to check is like what is their exit load and how they frequently they rebalance it. But because being a this being an index fund, so they keep on rebalancing it on time to time basis only. Like whenever a stock moves out of Sensex, they the mutual fund invest also drops that stock out of its portfolio. So that is one basic and very good instrument for investment, which is index mutual fund. Choose your you can choose between Nifty or Sensex, and your money will grow as the Indian market grows. So basically, index mutual fund can be, if not exaggerated, like you are betting or putting your money on the Inc. India Inc. means India Incorporation, मतलब इंडिया एज अ इकोनॉमी. सो आपको ज़्यादा दिमाग नहीं लगाना है. अगर इंडिया का ग्रोथ 5%, 6% है, तो निफ्टी के मेजर और सेंसेक्स के मेजर स्टॉक्स भी आपको वो ग्रोथ दिलाएंगे. Let's talk about next type of mutual fund. There are certain different type of mutual funds: equity, debt and hybrid. So अब हम इंडेक्स फंड की बात कर चुके हैं. Like अब we want to talk about different type other types. Like equity is more focused on, इक्विटी में भी हमारे पास दो टाइप के होते हैं. वन विच इज फोकस्ड ऑन डिविडेंड एंड वन विच इज फोकस्ड ऑन ग्रोथ. सो यू हैव टू अलाइन योर सेल्फ, यू हैव टू अलाइन योर प्रोफाइल अकॉर्डिंग टू द योर फाइनेंशियल गोल. इफ यू वांट टू गो फॉर अ फिक्स्ड इनकम की हर महीने हर क्वार्टर में आप यू गेट अ सम सर्टेन अमाउंट एज अ डिविडेंड, तो योर मनी विल बी इन्वेस्टेड इन, यू कैन इन्वेस्ट योर मनी इन द डिविडेंड mutual fund, in the mutual fund which is equity and in equity dividend. So equity mutual funds are basically your money will be invested in buying around 70% of equity, 70% of your amount will be invested in getting equities of various companies. So equity means shares. So you this is just basic. And growth means you will not be getting any dividends from these shares which have been brought by the mutual fund on your behalf, but you will get the long term benefit of their growth. Like how the capital gain is there, you will get the benefit of that growth. So this is the equity mutual fund. Equity, if you are bullish, if you want to get a good return, research your research for the different portfolios. Like I can suggest, but don't. A big disclaimer: don't take these suggestions as my guidelines. You can look for when I like certain equity, like mutual fund investing in certain pharma sector, certain mutual fund investing in FMCG sector. So you can FMCG is a good bet, good safe bet to align with, where you will not lose your money. Second, we can talk about is like the blue chip fund. What are blue chip fund? Blue chip fund is equity fund. It can be equity and debt as well, but equity fund blue chip is like the blue chips which we play in poker. The blue chips are the highest market capitalization companies. Like your money will be invested in major top 20-25 companies of the index, such as TCS, you can say Reliance, you can say Indian Oil, you can say SBI, you can say HDFC, you can say. So these are the blue chip companies, and your mutual and your equity fund will be invested in these major big mutual fund in these blue chip companies. So your growth will not be like astronomical, like you will not get say 25% return, but your growth will be stable, and your the risk will be moderate to low. Now comes different other type: small cap, mid cap, bank, auto. You guys might be having confusion. What are these when they say mid cap fund, small cap fund, auto fund, IT fund, bank fund, NBFC fund? So what are those kind of funds? So it's nothing. If you have you have to do your research. If you feel, if you have a clarity of, if you have some idea, like in certain quarter, in this quarter or in coming period, the auto sector is going to perform good, so you can invest your amount in uh, auto in the auto mutual fund, like in the auto sector mutual fund. So there are certain mutual funds which might be investing only in the uh, automobile companies or automobile and its ancillaries companies. So you have to do a little bit of research to outperform the market. So I'll say the risk and the reward are are a little higher in these kind of mutual funds, in these kind of equity mutual funds, which first we are talking. And next time I'll come up with some presentations as well. So if you guys want me to come up with some presentations, you can comment in the comment section, and then it will be much more helpful maybe. So this time you guys can just make a note of it or just reach out. Next type is debt mutual fund. So equity mutual fund is investing your money to buy companies shares. Debt mutual fund will allocate your money to buy companies bonds. So this is the primary difference, and your the bond will give you yield and the coupon payments. So the basic difference in the equity and debt is like your money will be invested in buying the company's bonds, and the company's bonds will give you dividend, and and this is a way more safer, but yes, less growth. In finance, there's a very basic thing: the risk and reward goes hand in hand. The higher the risk, higher the reward; lower the risk, lower the reward. In debt mutual fund, you will be assured that your money will not go in a negative return mostly, but you will get a growth of you'll get a return of around 4 to 5 to 6% on your investment. Hybrid is a good mix of equity and a debt fund, like 60% equity and 40% debt. So this kind of funds are also available according to your risk profile. If you are a risk averse, or if you don't want to take much risk, or if you just don't want to take even lowest risk, you want to be in somewhere in the middle ground, which is the best place to be. So go for a hybrid mutual fund. So these were just, I was talking about basic mutual funds. The first was index fund, equity fund, debt fund, hybrid fund. Now let's talk about other investment classes as well. Okay, before we move to next investment classes, I want to talk about fund of fund as well. So fund of fund, like I discussed, you can select a fund of fund which will invest your amount in certain percentage in different mutual funds. So you can look at the portfolio in which mutual fund they are investing, and you can select accordingly so that you have a diversified investment across different mutual funds. So that is also a good instrument you can make a note of. Other than that, there are a lot of other investment instruments which we can go discuss for hours and hours. And but yeah, this one investment instrument which I would like to discuss is gold. In this video, I would like to discuss one additional instrument which is gold. So there's a lot of buzz around investing in gold. So I'll say yes, it's a very good instrument to be invest in, but very basic thing, and most of you might be knowing this as well. Like gold has given us good returns. I can show you, but I haven't. This I will post it in the next upcoming video maybe. Like the gold in the return on investment for gold has been phenomenal, and I'll not exactly say the percentage, but it's around, I will say, 10 to 11% CAGR since 1990. And it's a good investment. You don't have to buy physical gold. Gold ETFs are there, so you can buy gold bonds as well, gold exchange traded fund. So it will be linked to directly, not, you have to not physically store or secure your gold. You can just buy the bond and it will be linked to the gold price. Only as the gold prices rises, your investment surplus also rises and your investment moves according to that. So that is one good instrument to be, additional instrument which you can invest in apart from the mutual funds which we have discussed earlier. So I'll keep it this much only because it has been a long video since now. So from next upcoming videos, I will discuss more on FDs, direct stock, IPO, day trading, forex, other investment classes, and please reach out in the comment section and tell me more about which topics you want to be more interested in, which you are more interested in, which I should be presenting more. So it's just a humble attempt to reach out to you guys so that I can share whatever I have experienced, share whatever knowledge I have, and if anyone benefits from these things, it will be a great success for me, and it will be great, good reward for me, and not for just for me. And yeah, that's it. I will say I want to just reach out to you people and help the society. Thank you. Thank you for watching. Good day.